The world is witnessing a seismic shift in global finance. This change is slowly moving us away from the dominance of the US dollar. We call this de-dollarization. It's a big word, but it means countries are looking for alternatives to the dollar. They are reducing their reliance on it for trade and investment. This is a big deal with far-reaching consequences for the global economy. Imagine a world where the dollar isn't the main currency for international trade. It sounds strange, right? But that's exactly what some countries are working towards. They're tired of the US having so much control over the global financial system. They want more independence and stability. This shift is being driven by several factors. One major factor is the escalating trade war between the US and China. The US has imposed tariffs on Chinese goods, and China has retaliated. This tit-for-tat has created uncertainty and instability in the global market. The rise of emerging economies is another factor. Countries like China, India, and Russia are becoming increasingly powerful. They want a bigger say in how the global financial system is run. They're also looking for ways to protect themselves from the volatility of the US dollar. This move away from the dollar is a gradual process. It won't happen overnight. But it's a trend that's worth paying attention to because it has the potential to reshape the global economy as we know it. So buckle up, folks, because things are about to get interesting. Remember that trade war I mentioned? Yeah, well, it's not just about tariffs and trade deficits. It's a symptom of a much deeper issue, the growing rivalry between the US and China. These two economic giants are locked in a battle for global dominance, and the trade war is just one front in this larger conflict. The US has long enjoyed its position as the world's economic superpower. The dollar is the world's reserve currency, which means it's used for most international transactions. This gives the US a lot of power and influence. It's like having a cheat code for the global economy. But China is challenging this dominance. Its economy has been growing rapidly, and it's now the world's second largest economy. China is also becoming a major player in global trade and investment. It's flexing its economic muscles, and the US isn't happy about it. The trade war is a prime example of this power struggle. The US has accused China of unfair trade practices, such as intellectual property theft and currency manipulation. China denies these accusations and argues that the US is trying to contain its rise. This trade war has created a lot of uncertainty and volatility in the global market. Businesses are worried about the impact of tariffs on their bottom line. Investors are nervous about the future of the global economy, and consumers are feeling the pinch of higher prices. In this environment of uncertainty, many countries are looking for ways to reduce their dependence on the US dollar. They see de-dollarization as a way to protect themselves from the fallout of the U.S. China Trade War and the potential for future economic shocks. Now let's talk about the BRICS nations: Brazil, Russia, India, China, and South Africa. These emerging economies are leading the charge in de-dollarization. They are tired of being at the mercy of the US dollar and are actively seeking alternatives. The BRICS nations have been steadily increasing their gold reserves in recent years. They see gold as a safe haven asset that can protect them from the fluctuations of the US dollar. It's like stashing your cash under the mattress, but on a much larger scale. But the BRICS nations aren't stopping there. They are also developing their own financial institutions and payment systems. For example, they have created the New Development Bank, which is an alternative to the World Bank and the International Monetary Fund. The BRICS nations are also promoting the use of their own currencies in international trade. This is a direct challenge to the dominance of the US dollar. They are forging new trade agreements and partnerships that bypass the US dollar altogether. The rise of the BRICS nations is a testament to the shifting balance of power in the global economy. They are no longer content with being rule takers. They want to be rule makers. And de-dollarization is a key part of their strategy to achieve this goal. Let's focus on China for a moment, shall we? They're not just going along with the de-dollarization trend, they're practically leading the parade. And when it comes to gold, well, they're like that friend who always seems to have a stash of snacks hidden away just in case. China has been quietly but steadily increasing its gold reserves for years. They're buying it up like it's going out of style. And they're not exactly broadcasting their every purchase. It's all very hush-hush. But the numbers don't lie. At the same time, they've been doing a little spring cleaning with their U.S. Treasury holdings. Remember those? It's basically like lending money to the U.S. government. Well, China's been selling those off bit by bit. It's like they're slowly distancing themselves from a friend who keeps borrowing money and never quite gets around to paying it back. Now, why is China so keen on gold? It's not just because they like shiny things, though they certainly don't mind a bit of sparkle. Gold is seen as a safe haven asset. It's like the reliable, boring friend you know will always be there for you, no matter what economic storms are brewing. This golden strategy is all part of China's long-term plan to reduce its dependence on the U.S. dollar. They're playing the long game, folks. And they're playing it strategically.